Today, we're going to pull back the curtain on a group of people you've probably never met, but whose decisions literally impact your wallet, your loans, and even the price of your groceries every single day. We're talking about the people who are actually steering the entire Philippine economy. Think about it. When you see news about inflation shooting up, or you hear that the economy is facing some serious headwinds, have you ever wondered who's actually at the controls? Who's making the tough calls to try and navigate us through the storm? It's a huge question, and the answer isn't always who you think it is. Well, the answer is the Monetary Board. The best way to think of them is as the pilots in the cockpit of our national economy. They are the highest policymaking body of the Bangko Sentral ng Pilipinas, the BSP. And their entire job is to keep our economy flying as smoothly and as safely as possible. So, here's our flight plan for this explainer. First, we'll look at the board's core mission as the economy's pilots. Then we'll actually step inside the boardroom to see who these decision makers are. Next, we'll check out the powerful tools they use, break down their whole process from data to decision, and finally, look at how their choices create a very real impact on all of us. All right, so what is the fundamental job of these economic pilots? Well, if you boil it all down, it comes to one word: stability. Their main mandate is to maintain price and financial stability, which basically creates a predictable environment where the economy can actually grow. And they do this through something called monetary policy. Now, that might sound complicated, but at its heart, the concept is pretty simple. It's all about managing the country's money supply. By controlling how much money is flowing through the system and how easy or hard it is to borrow it, the board can influence inflation, growth, and the overall health of the economy. Okay, so who exactly are these pilots? Who are the people sitting around that table making these critical decisions that affect millions of Filipinos? It's actually a pretty small and focused group. The Monetary Board is made up of just 7 members, and each one is appointed by the President of the Philippines. Keeping the group small like this really allows for detailed discussion and, when needed, very decisive action. The way the board is structured is really designed to bring in a bunch of different, crucial perspectives. The whole thing is chaired by the BSP governor. Then you have one member from the president's cabinet, which makes sure the government's spending, that's fiscal policy, is in sync with what the BSP is doing. And here's the really important part. There are 5 members from the private sector, and they bring in independent, real-world experience to the table. And let me tell you, the qualifications to get one of these spots are, as you'd imagine, incredibly strict. All members have to be Filipino citizens with proven, recognized expertise in fields like economics, banking, or finance. They absolutely cannot have any conflicts of interest, and they serve for 6-year terms, which is super important because it gives them independence from short-term political wins and provides some real continuity. Okay, so now we know who they are, but what can they actually do? What are the levers and dials these pilots have at their fingertips to steer this massive economy? Let's get into their powerful toolkit. All right, their single biggest, most important tool is the policy rate. This is the main interest rate that the BSP sets. And the key thing to get here is that this isn't just some abstract number for economists. No way. It directly affects the interest rates your bank offers for your savings account, your housing loan, your car loan, even your credit card. It's really the main tool for making money either cheaper or more expensive to borrow. But the policy rate isn't the only tool in their shed. They've got others. For instance, they can directly manage the money supply by telling banks how much cash they need to keep in reserve. Or they can conduct what's called open market operations, basically buying and selling government debt to fine-tune things. And then you have their broader powers. They're the ultimate supervisor for the entire banking system. They manage the country's stash of foreign currency, and they're basically the guardians of our nation's financial stability. So how does a decision actually get made? It's not based on a hunch or a gut feeling. It is a highly structured, super methodical journey that starts with raw data and ends with a final policy decision. The whole process kicks off with some intense prep work. Expert departments inside the BSP collect and crunch just mountains of data on everything from local inflation to global economic trends. Next up, a senior advisory committee sifts through all that analysis and makes a recommendation. Then it's time for the main event, the Monetary Board meeting, where those 7 members debate, discuss the risks, and eventually vote. And finally, and this part is key, they announce their decision and explain why they made it to the public, which ensures transparency. And this right here is the core principle behind everything they do. Their decisions are not based on politics or what feels right. They are grounded in hard data, rigorous economic models, and solid evidence. This commitment to an evidence-based approach is what really gives their actions so much credibility. Okay, so let's take all of this theory out of the boardroom and put it into the real world. How does this whole process translate into actions that you can actually see and feel in the economy? It really all comes down to a fundamental balancing act. If inflation is high, meaning prices are just rising way too fast, the board will usually hit the brakes by raising interest rates. This makes borrowing more expensive, which cools down spending and helps get prices under control. On the flip side, if the economy is slowing down, they can hit the gas by lowering interest rates. That encourages businesses and people like you and me to borrow, spend, and invest, giving the economy a much-needed boost. A perfect recent example is the big inflation fight we saw in 2023 and 2024. You'll remember this. As global supply issues pushed prices up, the Monetary Board acted. And they acted decisively. They raised that key policy rate multiple times throughout 2023. And yeah, that was tough for anyone with a loan, but those actions were absolutely crucial in managing everyone's expectations about future inflation and in stabilizing the value of our peso. So when you put it all together, what makes this whole system actually work? Well, it really rests on 3 essential pillars. First, credibility. That means markets and the public trust that the BSP will do what it says it's going to do. Second, independence, which shields their very important decisions from political pressure. And third, expertise, which ensures every single decision is based on solid economic reasoning. Together, these make the Monetary Board a true cornerstone of our economic stability. And this brings us to the ultimate question at the very heart of their job. Their goal is stability, right? But what happens when the goal of keeping prices stable is in direct conflict with the need for economic growth? How do you choose between fighting inflation by making loans more expensive when you know it might also slow down job creation? That is the perpetual tightrope they have to walk, and mastering that incredible balance is the true art of steering an economy.